Everybody, Jason here. Happy hump day to everybody. Hope you guys are all having a great day. So today we're up a little bit again. I think yesterday we ended up up 2000. Today we're up 1200. So I don't want to say it's a boring day in the market because every single time it seems like I say that, we get excitement, and that excitement typically is to the downside. So I'm not going to do that to myself or any of you guys. So we'll take our nice, boring, not moving much market, and we'll just collect our little $1,000, $2,000 a day. And $1,000, $2,000 a day is not little or small by any means. So yeah, that's not actually what I mean. It's not small. It's fantastic. It's wonderful, and we're very blessed and lucky to be doing that well. So taking a look at a couple of the plays, this calendar spread doing pretty well here. We're up about 22% on that. So thank you for suggesting or asking me to open one of those. So that is that's doing pretty well. I can hold that over the next couple days if Tesla doesn't move too much more than like $30. That'll be a nice profitable play, and we could grab another few $100s on that in the next coming days. And I did open up an iron condor yesterday. Don't do this play. Terrible. This is a bad example of a play, especially after yesterday. I talked about getting time on plays. So this is a bad play relative to my account size. Not too big of a deal. We grabbed a $110 credit. You can see our strike prices here for $500 collateral. So our max risk is $390 on this play. And I just see Tesla kind of moving sideways for a while. That's why I opened it, and maybe a little bit of impatience there. But even though I did that, and again, don't make that play. Don't open things up very short term. It's just a bad idea. And I think it really helped me talking through what I did yesterday about getting time on plays, and really kind of thinking through probability of profit. And realizing the only thing that we have on our side at the end of the day is the ability to manage our positions. That's really it. Besides, if you open up a play, the probability of profit is 90%. Fantastic. 9 times out of 10 you hit it. But that 10%, that can eat up all your profits, because most likely when you're opening up those high probability plays, you're picking up pennies. Like if you think about the SPY broken wing butterflies that I do, I put $300 up to collect $10, $11, $8, $9. So very, very little. So if I have one of those move severely against me, it could wipe out basically 30 of those plays being profitable. We also do have that little kind of lotto, so it is potential that I could hit right in that zone where they are profitable, $100. That would, over enough occurrences, happen once in a while. But statistically, overall, your 90% probability of play, you're going to lose 10% of the time. 80% probability, you're going to lose 20% of the time. And those losses could be huge. And generally, since the market is efficient, the market is fair, if you do nothing else but open up those plays, and you don't have any news, any events, anything that you've built maybe a thesis around, and you're just kind of playing the numbers, that one-time loss out of 10 or two losses out of 10, whatever they are, whatever probability you're playing, are going to eat up the profits. So the only thing that you have on your side is the ability to manage that play. And without that time that I talked about yesterday, you don't have that. So that takes that tool away from you to be able to manage anything. And without that, you're going to probably, like, just based on the probabilities, you're probably going to end up kind of flat on all of your plays. And it is a lot easier to manage the 1 or 2 losing plays out of a 10 than going like lower probability, higher profits, then you're managing a whole bunch of losers and only a few winners. And overall, for the long term, like, you're probably looking at trading for years. I mean, once you get it, and once you put more time into it, you're probably getting just better and better. You're accumulating knowledge. You're getting used to how things move, why they move. You're understanding market news. You're understanding news on certain companies, whether or not that actually affects a stock short term, long term, and just like overall markets. You're getting better and better and better. So there's no reason you're probably going to quit, unless like I say, sometimes I think the reason most traders lose is they have like one big loss and they just stop and they quit. But over the long term, the better that we can trade and the better good decisions that we can make, the more we're going to be profitable long term. We're not going to be emotional about down days as much, because it's just kind of all part of it. The more occurrences we have, so the more trades that we do, those probabilities start to be realized. So if you think about somebody walking in and they win, which pretty much happened to me in the beginning of this account, right? I won. It was ridiculous. I mean, it was absolutely ridiculous growth, going from $500 to $50, $60, $70,000 in the course of a couple months. Those are very lucky, probably once in a lifetime. I probably won't make those plays ever again. Who knows? I mean, it could happen, but that is ridiculous growth, right? So what happens after that? I grow huge, and then I kind of settle into a strategy, and then I grow from there, and that all worked out fantastic. And like people say, it works until it doesn't. So then it doesn't work for a period of time. I give back a ton of gains that I've made, and you can even see that over some of the shorter term times where I'll have days where I'll lose $10,000, $15,000 worth of account value. But over that longer term period, if I had not given myself that time to be able to manage plays, I could have tanked this account down to nothing. That's definitely possible. I do have enough equity into it where it's not highly probable, but that's something that could happen. And just after I'd made that video and thinking through it, it is really ridiculous for the long term, for your overall growth, to play anything really short term. I know a lot of people do the 1, 2, 3, 4, 5 days expiration. They're having to manage it and watch it very closely. Not everybody has the ability to sit in front of their computer and actually watch the underlying all day long and make adjustments as they're needed. A lot of people, like even me, I'm not able to watch it every minute of the day. I spend a lot more time, and my job allows me more flexibility to watch it the majority of the time, but just not all the time. So just wanted to kind of put that out there a little bit. Hopefully that's helpful and speaks to somebody. Like our gains even this week they've been phenomenal. They could have been much better had I not rolled things out, had I not pushed my expirations out another few weeks. But that steady growth, even though it may be a little bit slower, is so much more important than not having just everything at risk and then taking away your tool. The only one that we really have is managing our positions, rolling them out, rolling them down, rolling them up, taking them off, closing them for a certain amount of profit, closing them out at a certain amount of loss. That's all we have. That's at the end of the day. So that is why this play is bad. And winning does not make a play good. Losing does not make a play bad. And kind of same thing here with the calendar. I'm playing them. I honestly get a little bit bored of just put credit spreads all the time. So that's what I have for you today. DraftKings popping up. This is a poor man's covered call that I sold. And holy smokes, I hope we get a little bit of a pullback on DraftKings just to see where we're at there. But everything else, I think, is looking pretty decent. We have that broken wing butterfly here on the SPY, 100%. I'm sure we'll have that. We have our covered calls on Tilray. We have these two plays, which don't do them. Broken wing butterfly call that I sold. This is a poor man's covered call on an Apple leaps that I have. Well, not, I don't know, depends how you define leaps. It's less than a year, but still a poor man's covered call anyways. And then other than that, we just have several put credit spreads on. I didn't mean this. Oh, here's one for you. Dropbox. I lost $20 on this because I accidentally bought calls instead of sold them. Just a fat finger. It cost me $20, and then I went ahead and actually grabbed some calls that I sold. So we'll only have what? Oh yeah, I guess we'll get our we'll kind of break even on that fat finger if we can. Still have our Netflix Iron Condor going. I really have liked the Netflix Iron Condor at these strikes. If you look at the history, they really just bounce between those two levels. And then we've grabbed put credit spreads on SPY when it's down. And we still have these couple Iron Condors. These are starting to do pretty well. That we originally grabbed $186 worth of credit on. We're up almost 40% on these. We still have a decent amount of time on those. But that's, I think, all we've really put on in the last few days. So I guess we'll end this video up a whole $500 and see if we can't just end the week pretty sideways. All right, love you guys. Let me know if you have any questions, any plays that you specifically want to see, that you'd like to see me open. Other than that, let's go make a lot of money.